Student loans, what they are and how they work. The problem with student loans is that few students comprehend how they work or the impact they can have on future goals and plans. Everyone wants you to continue your education when you're about to graduate from high school, but no one can tell you how to pay for it. It's just assumed that if you want to go to college, you'll have to take out a large loan, or two, to pay for it. What is a student loan? A student loan is cash borrowed from the government or a private bank and arranged to pay for college. The credit must be paid back afterward, alongside interest that builds up over time. The money can more often than not be utilized for educational costs, room and board, books, or other expenses. But a few understudies utilize their advance cash for other stuff like trips to Greece for spring break. The loans are too distinctive from work-study programs, where understudies get paid to work on campus. Student loan forgiveness. There are numerous individuals within the states who may feel impeded by their student loan repayment obligation, but the Open Benefit Credit Pardoning (PSLF) program was brought in 2007 to assist people to pay it off in a speedier and less demanding way. As a portion of the government program, any qualified borrowers are able to have their credits cleared after a long time on the off chance that they meet a few qualifying necessities. To arrange to have your student loan pardoned after a 10-year period, a few of the prerequisites that got to be met are as takes after. You must be working full-time for the government or a qualified non-for-profit in a certain field, like firefighting, instructing, government, nursing, open intrigue law, military, or devout work. Also, you wish to have made installments for 10 years, totaling 120 installments for the complete sum interior 15 days of the date the month-to-month installments go out. You wish to have a loans within the Government Coordinate Advance Program, in spite of the fact that you'll solidify your government credits as one installment as a portion of the PSLF. In any case, a few of the sort of players that don't qualify for the PSLF incorporate work unions, divided political organizations, and for-profit organizations, which incorporate for-profit government, and temporary workers. Again, not everyone qualifies for this, and it's not that reliable. Student loan repayments. Standard repayment plan. The government or your loan specialist gives a plan with a set month-to-month installment sum. For government advances, the arrangement is for 10 years. The government or your loan specialist gives a plan with a set month-to-month installment sum. For government advances, the arrangement is for 10 years. Graduated repayment plans, the installments begin off lower, but they increment each couple of a long time or so. The arrangement is still to have everything paid off in 10 years. Extended repayment plans, for borrowers with more than $30,000 in outstanding loans, these programs prolong the payment period beyond the standard 10-year period. The payments are planned to pay off the debt in 25 years and might be set or graduated, meaning the payments increase gradually. For borrowers with more than $30,000 in outstanding loans, these programs prolong the payment period beyond the standard 10-year period. The payments are planned to pay off the debt in 25 years and might be set or graduated, meaning the payments increase gradually. Income-based repayment plans, payments are based on the percentage of your income in these programs. After taxes and personal expenses are deducted, you'll typically pay 10 to 15% of your income. Payments are based on the percentage of your income in these programs. After taxes and personal expenses are deducted, you'll typically pay 10 to 15% of your income. Income contingent repayment plans, this plan is similar to the income-based plan, except it is based on 20% of your discretionary income, the money left over after your fixed expenses have been met. Income-sensitive repayment plans, these plans are identical to the other income-related plans, except instead of your discretionary income, the payment is based on your total income before taxes and other expenses. It is estimated that the debt will be paid off in 10 years. Repaying private loans. Because private loans are agreements between you and the lender sets the payment terms. Each month, you'll pay a certain amount that includes both principal and interest, and the payments are normally fixed for a specific period of time. Any modifications to that plan, such as a graduated payment schedule, would have to be worked out with the lender. You could always try bribing them with cookies or something. Still not convinced that taking out student loans is the worst method to pay for college? What if I told you that approximately 6% of students owe over $100,000 in student loans, slowing down all financial development after graduation? Look for on-campus employment or a work-study program once you've started college. The choices you make today will have a long-term influence on your financial stability. You'll set yourself up for a lifetime of success if you take these actions today, and freedom from those monthly payments.